An overabundance of angel investors. So you get ready with your questions, because obviously, as I titled this roundtable, angel investors keep the startup ecosystem alive. So we have to be really grateful to them. And as a friend of mine once said, angel investors pay to help startups, right? So often there's not a lot of payback to them sometimes. So I'd like to take it over to Wayne, who's going to moderate, Wayne Sutton, who's going to moderate the panel. And he's going to get everyone to introduce themselves so you get an idea of their background. And then they'll have a talk, and then for 30 minutes the Q&A will be open to all the attendees. Thanks very much.
Great. So hello everyone, I'm Wayne Sutton. I'm the founder of a platform called Pitch2, which allows you to manage and rate founder pitches and also allow for entrepreneurs to create a profile and get feedback on their product and pitch. I like to position it as a pre-angel list for startups. And I'm excited today to be here to moderate this panel. I want to thank people for having me, and great job organizing the event. Let's give her a hand for all her work she did. And the title of the panel is How Angel Investment Supports the Startup Ecosystem. And so without further ado, I'm going to let, because no way I'm going to remember all these names or all the descriptions of everybody. So I'm going to let each panelists introduce themselves and also tell us what is your passion or what is your investment thesis. Or more not your passion, what's your investment thesis? What industry are you focused on?
All right, so my name is Nick Basso. I represent the Angels Forum. We're a group of about 25 high net worth individuals, former executives. I guess my focus or my background is did sales for eBay, PayPal for a number of years. Most recently worked for GigaOM, which is an online media company following emerging tech. And then recently was in the food business this past year, building a kind of a food marketplace. I guess my favorite or area of my interest is probably food and consumer, and preferably anything that can scale.
Great. I'm Neil Strickberger. I've been a technologist and everything from software developer to operations guy since about the age of 6, which was unusual back then. It isn't now. And so worked for a number of startups, did a couple of exits, and my angel focus in investing has been primarily enterprise software because it's something I understand. So as a bit of a pay forward, I've gotten pretty heavily involved in some of the companies I've invested in terms of mentoring, providing some of that focus on scaling in particular and on market.
I'm Trish Costello. So my claim to fame, if I have one, is that almost 20 years ago today I launched the Kauffman Fellows Program, which is the Venture Capital Fellowships Education and Training Program, and led it for almost 12 years. I'm still committed to really enhancing the equity in great companies, but now I'm a little more focused on it from the standpoint of the woman as a high-value investor. I think it's going to shift everything, and my platform is Portfolio, where we focus consumer influencers to invest in entrepreneurial companies they believe in and use their social networks to create markets for them. So that's my word.
That's a great segue. Thank you. I'm Gwen Edwards, and I don't really have a claim to fame, but I built my career in the Fortune 500 world in telecommunications industry, and then became CEO of a company in Silicon Valley in 2000, 2001, in the boom and bust of the telecom industry. It was a software company. It was my dream to be an entrepreneur my entire Fortune 500 career, thinking I'll get to the point where I can get out there and be the leader I wanted others to be, and found how really, really challenging it is and was, but couldn't give it up. So I continued to work with other companies in the space, and then a few years ago started also to really get involved in angel investing, co-leading a group called Golden Seeds. And Golden Seeds focuses on companies where there's a woman with at least a 10% equity position in the company. And I also do some other investing outside of that, but that's a thesis that I really love. And we find great deals, and the market is still underserved. And my personal passion is for opportunities that can be cash flow positive with only angel funding, and where you've got a real clear path to that visibility because there's revenue traction. And I also love opportunities that have social impact. Thank you.
I'm Roger King. I'm the founder of Bay Angels. You can tell from my accent, I'm originally from England. I was the CEO of a publicly run company in London for a number of years. I moved out to the Bay Area, pardon me, in the late 80s. I founded a search firm called Chief People, so I'm in the business of funding early stage technology companies and building their technology teams. We've been around for 15 years. Some of our earlier investments would be OpenTable. We provide seed money for them. We did PhotoBucket. More recently, we're looking at a company that's doing a platform for real money gaming. And I've also become really interested in social purpose companies, which are companies that can not only make a profit, but make you feel good about the work that they're doing. And I like scalable businesses that address a large market. And I like people with a passion. I don't care that much about your track record. If we get funding and you've got a great idea, we can build the team around the pieces that you don't have. So don't get dismayed when people say, well, come back and see me after you've done 3 successful startups. I have a passion for working with early stage companies and meeting the founders. And thank you guys for being entrepreneurs, because without you guys, there wouldn't be any Angels.
So my name is Andrew Romans. I'm the co-founder of Georgetown Angels. We are a hybrid venture capital fund with an angel group. So our angels and family offices put money into a VC fund so we can move a bit faster. Every time the fund invests, all of our investors can co-invest with us. So we make investments of 100K, which is pretty early, up to 2 million, and all the angels will invest more. So theoretically, 100K from the fund, maybe 300 to 500K from the angels that are personally interested in what you're doing. So we try to populate the company with not just one frantic VC who's on 18 boards, but with the angels that, you know, understand your industry. I also wrote a book published by McGraw-Hill not that long ago called The Entrepreneurial Bible to Venture Capital. That's got 40 different VCs, like Bob Pavey, who is here, and Tim Draper, people like that, telling stories where they learned something. So I'll stop there on this huge panel.
Hi, I'm Deb Parsons, and I've been in the early stage and growth stage venture capital world for about 10 years. I had managed an angel network called Investor Circle, which is a national network of about 200 angels, and after that I worked directly with angel investors on getting them over the finish line. How do we get the money to the entrepreneurs? And for me, my passion is really about questions of access to capital for the entrepreneurs, especially those that have been underrepresented, and also for the investors, those who don't have access to great deals. So just recently, I joined Trish at Portfolio, and we're aiming to do just that, is really break through that question of access and make sure that, you know, good deals are getting funded by people who can help them succeed.
Thank you. My name is Arun Subrao. I'm one of the principals at an angel investment forum called Uncoated Angels. So we're slightly different. We actually don't have a fund. What we do is we aggregate a bunch of investor members, and we provide a platform for entrepreneurs to come in and present their business plans to us. We've seen a fair amount of domains that have come to us, you know, anyway from healthcare to mobile security. So we see a lot of different types of technology domains. I myself have been in the Valley for 20 years now in a lot of high technology fields, security, virtualization, etc. Glad to be here.
Great, awesome. Let's give our panelists a hand. So there's 2 real popular topics in the whole entire angel investment space: is crowdfunding and syndication. We'll jump on crowdfunding first. How has crowdfunding affected your angel investments, and has it changed anything, or has it actually helped you in terms of opportunities in working with founders?
I think that crowdfunding's got massive potential, but we have not invested in a single company that's raised money from crowdfunding to date. None of the deals that we're looking at seriously have. And the SEC, in its attempt to do the right thing, has made it pretty difficult for a company that's opened itself up to 506C to then get back into dealing with smaller set of smart investors. So I'm a big believer it'll take off. I wish I invested in some of the crowdfunding platforms.
There's still an opportunity.
I don't want to sound like total doom and gloom.
Yeah.
But it seems to be filling a different gap in the market than the Silicon Valley, New York deals.
Good.
But one thing though with it is that what we think of as crowdfunding from the Jobs Act for non-accredited actually hasn't come into play yet, because it's not yet out there. But there's, the donation crowdfunding is really a pretty remarkable, the now $1 billion that's going in, contribution crowdfunding, reward crowdfunding, like you'd said. I know that Danae will be here later on to talk about Indiegogo. But what I really think though with the Jobs Act that's changed is Title II rather than Title III, and that's the public solicitation. And to me, that's what, and that happened September, I think, 26th, and it has been really significant because, up until now, if you were fundraising, you could only really fundraise from people that were in your immediate circle or that you had a direct, introduction to. And that's all changed. You can actually, and people are, in fact, thousands, so right around 5,000 out here, are actually advertising their fundraise. You'll see it on Facebook, you'll see it on their websites, and it's greatly expanding the numbers of people that know about investments. You do have to be accredited. You do have to be validated as accredited. No non-accredited can come in, but it's really, I think, shifted the understanding of the public that investing in private companies is a possibility.
I think it's, first of all, I think it's going to be very interesting, and I look at the positive side of it, which is, especially for consumer deals, one of the things that as a group, we see a lot of really interesting companies, from food bars to organic chicken to just really, but interesting, goat-based ice cream that, we just thought, wow. And, it tastes great. And then we sit there and say, but we know the biggest problem is getting distribution. And so we typically like to see a lot of revenue behind a company before, if it's a pure consumer company. And so I look at things like these crowdfunding platforms, and I think what we'll be able to do is refer companies like that, see them get traction, where there are a lot of consumers validating. So A, they get money, B, they get consumer validation, and it's that consumer validation that the rest of the investment community wants to see before they jump in. So I think that is just a beautiful sweet spot that's, I can't even imagine how it wouldn't work. But, and then there are other kinds of companies that I think it's really ideal for.
I want to piggyback on what Trish was saying, but the public syndication, has it helped you find deals or made your job easier with the public syndication? I would think so.
No. Well, no, not really.
Not
but
really?
I think, there's interesting dynamics happening, like on AngelList. I should leave the company nameless, but a company recently was contacted by AngelList because they were getting so much great press and asked to be interviewed. So they did an interview, and they said that AngelList said, we're going to showcase you. So this entrepreneur was so excited. Great. She follows up. Was it she? She follows up, finds out, oh, we've decided not to showcase you until you have one of our alpha investors in your deal. Now, we all know that those investors that have a brand name are asking for a percentage of the carry. So now we're starting to get a hierarchy going on in the angel community. And this person was so frustrated that, she's trying every which way to find access to capital. And now she's also been told, well, until you have, the right member of the club endorse you, we aren't going to back you yet.
Can I tell the rest of that story?
Okay.
Because the rest of that story is that after that angel who has that entrepreneur who has a kick-ass company.
Yeah.
Great, and she has been an executive at a top company, was basically, you know, kind of put to the side by Angel is she contacted us. I think actually, Gwen, you introduced us. And so she's now going on the Portfolio platform. And we think that this is, you know, going to be one of the most interesting companies we have. She's going to be presenting at a big forum in the next couple of days, and we think that it's going to be a real winner for us. So it's this kind of group here, which is now the Old Girls Network. That's remarkably going to shift what's happening for women entrepreneurs and women investors. We're not.
Speaking
No.
So back to your question,
Okay.
my short answer would be, I think crowdfunding has expanded the friends and family round, because it's expanded the family that you can reach out to.
And what about?
You want some coming to crowdfunding?
Yeah, I think that's what we see as well, is that, we see a lot of initial, small amounts of money being raised through crowdfunding instead of friends and family, and then they come to sort of the higher levels of investment.
There's another networking thing here. Just, you want to mention it, Roger? It's about, well,
Go ahead, you brought it up.
all right. So,
Tag
and it's a
team.
guy who's leading this, and there are one, but, no, this is a company, it's called Make a Stand, and they're about to raise a Series B through crowdfunding.
Nice.
Now, that's really interesting, and what they need to really make it work beautifully is a lead investor to price it, and then it'll go out on crowdfunding.
I think it's important to look at the legal details, though. I mean, like you said, there's rewards-based crowdfunding, which is big, where people they pre-order the watch, so the thing is funded to make the watch. And there's equity-based crowdfunding. If a company goes out and raises an equity-based crowdfunding round, they have signed up for 506C. And most venture capital firms would not be able to invest in that company afterwards. The compliance is significant. Like, if you are in 506C and you make a change to your PowerPoint investor deck, and you want to announce Richard Branson invested this morning, or we did a deal with Walmart, you've got to send it to the SEC and let it sit for 15 days before you can show it, like, in public. So I mean, like, the details of what you've got to comply with on 506C, which is the equity-based crowdfunding, is really rough. If someone who's invested, if one of the 6,000 people that put money into that last crowdfunding round makes an argument that the marketing materials were misleading, they can rescind their money at any time, which is like an open liability. So I just think that when you do, I agree with things that people are saying, that if you do equity-based crowdfunding and you validate a huge amount of interest for this, like, goat ice cream deal, as you mentioned, then I may not be in the peer group that's dying to buy the goat ice cream, but I see it validated. That's great. There's no liability there, equity-based straight into smart money. But the SEC could do a better job to achieve the objectives of what we were trying to do with crowdfunding. I had an event planned with TV there on the 24th of September to publicly solicit something. And we decided no media there, there's no way we're doing that. We don't want the $300,000 legal bill to defend ourselves. If you look at Angels Forum, and you're better to explain this than anybody, they don't want 26 angels in that forum, right? 25 is the magic number. They only want deals that are being sourced from these 25 people. It's kind of the opposite of the crowd.
Yeah, cool. Well, let's shift gears a little bit.
I would just say you need to talk to some legal things. The public solicitation, which is the Reg D exemption right now, you have to provide. It was originally you were going to have to provide your material 14 days in advance. What actually happened is that you now have to provide it 14 days after your first investment.
Okay.
So that was the
Let's
original.
shift gears.
But if I
back
invest,
from
don't I have to show my tax returns, or like 22-year-old startup wants my money, I've got to provide that entrepreneur with a copy of my tax returns or bank statements?
That was the fear. What you do have to do, there are multiple ways to do it, to validate that you're accredited, but what you can do is have it validated by a third party that is either your lawyer, your attorney, your broker, or your banker, and then the people validating have to contact them to make sure that they really are that, and then they just show that, but that was
they've
the
reviewed
original.
my tax return.
Yeah, that or they're your CPA, and then they can attest that for the last 2 years you were over the 200. And originally lawyers or CPA said they wouldn't do that, and now they're doing it all over because it's but we're all right in
Yeah,
the
yeah, let's shift gears right quick from crowdfunding. I knew it was
There's
a
actually an
topic.
alternate funding panel later, so
Yeah.
maybe we can stir this up a bit more.
Yeah,
Thank you.
but I do still want to talk about platforms a little bit, because I know Neil's working on a platform, and I know Trish has a platform, and we all just talked about AngelList. In terms of the angel space and the angel groups, how do you see platforms come into the space in terms of impacting decision making and monitoring deal flow? Because I think we see more data-driven research output in terms of what deals are going to a certain entrepreneurs or certain opportunities.
So, as an investor and as a member of Keiretsu, the main thing we use is GUST, right, which is you know the repository for information from the entrepreneurs, and then we maintain our own. Various people are doing things with spreadsheets and other things, but individuals are making individual decisions as a collection of angels using all kinds of random methods. And the challenge for me was attending a number of events and seeing all this potential deal flow and not being able to keep track of it, and also not being able to collaborate. So a couple of us put a platform together to do that, much more dynamic than GUST. But I think there's a huge opportunity for some consolidation of these platforms so people can actually start doing things in a metric-driven way as well. It's hard to, there are all kinds of arguments around what's going to be successful and what's not going to be successful. If we could all predict success, we'd be, that would be our business rather than investing. And I think that that's where the VCs in particular have armies of MBAs doing this, and maybe they're doing better than we are in some cases, and maybe not.
So we had a conference last fall. We got 10 angel groups together. We talked about this issue, and we formed an unofficial alliance of 10 angel groups to share data, to share deal flow. And the theory behind that was, I'll use medical devices as an example. In our memberships, we might have 1 or 2 members that really understand medical devices, but if we share the deal flow between the 10 groups, and your group is one of them, then we might have 20 experts in that field. So we're quietly sharing deal flow, we're giving thumbs up, thumbs down, we're making it easier for entrepreneurs to get past one of them to get in front of 9 of us. So we're working on that on an unofficial basis.
So I want to go down the line, and this is a question directly related to the topic, is, outside of angel investment, talk to me about what your firm or your organization provides outside of the capital to entrepreneurs. Because, capital is one thing, but as you know, it takes more than just the capital just to be a successful entrepreneur.
Well, the Angels Forum is unique in that the group meets every week. So I'm kind of new to this field, actually, in general. I've been in this for a few months now. But a lot of the angel groups that I've seen, you guys might speak to this, typically don't meet on a weekly basis. So besides the geographic location, everything has to be within 50 miles of our headquarters. It just allows the members to have more of an impact, more of a one-on-one kind of consulting relationship with their company. So, and I think in general, from what I learned about angel investing years ago to what I see now, is that it's becoming more of a hands-on relationship. People are taking more active roles in the development of the company, development of the entrepreneur. It's not as informal as it maybe once was. And that's a good thing. So again, just to close that out, Angels Forum meet once a week, gives you an opportunity to really, on a weekly, regular basis, ask questions, get help. So we think that's kind of our secret sauce.
So I have my foot in 2 camps. One is as an individual and the other as a Keiretsu member. And Keiretsu in particular looks at this and says, let's give back resources to the entrepreneurs, to people who present, and make those free resources available. So more, the kinds of connections and trying to almost bridge the gap a little towards what the VCs do, where you get the depth of the Rolodex, or the depth of the connections, or the support. And as an individual investor, there are a number of companies that I've participated with as a mentor, as an advisor, sometimes pro bono, or sometimes it goes beyond that. But where I have domain expertise, and if I see something that's interesting, or a team that's passionate, and I feel like I can contribute, I'll jump in, and sometimes it really find places where I can really help.
So I think angels are really highly valuable in this whole, finance food chain. When we were creating portfolio, what we were looking at is, because so few women invest, only 0.5% of women that are accredited to be angels actually have invested. And so it's like, where do women have the greatest opportunity for impact? And we looked at this, and we looked at companies like Pinterest and Airbnb and Etsy and all of these. Those are billion-dollar companies because of women's networks. 92% of women share products that they love with over 170 people. And so it's that ability to become basically a market maker, to be evangelist in the space. And so that's what we started looking at when we wanted to empower and kind of unwrap the leverage of women, both financially and as high value, high impact players, is to be able to identify those companies where women evangelists make the difference for their success, and then find the ways to focus them. And I think that's what's really, I think when we look at it, that 60% of the wealth is held by women, and we haven't invested in entrepreneurial companies. I mean, when we unlock this, it's not just good for women investors and companies, it's good for the economy. And, there's a lot of questions about how to actually do it, and Gwen knows more about that than almost anyone here, but that's what we're looking at, what we're going to bring as far as the value add.
So our group has almost 300 members nationwide, and it's pretty amazing. They're former CEOs of Fortune 500 companies, and physicians, and all really accomplished people. And a large number are in New York, and some in Boston, and some in Dallas, and some here. But there's real power in that network, and I think that's what is just the extra muscle that is brought to companies that we end up investing in. So, in a short answer.
I think there's two types of investors. There's the kind of investor who writes a check and says, get back to me in a couple of years when you get acquired or you go public. And then there's a professional investor. I think the first type of investor is not an investor, I would call them a donor. Not an investor. I'm personally invested in 4 companies. I work with these 4 companies every single day. And the reason is because it's personal. And the difference between a VC and an angel, it's our money. Don't get me started on VCs, bless their heart, but they're basically, VCs are heavily armed sheep. They basically follow the angels, right? But it's not their money.
Heavily armed sheep. It's gotta get out there. All right. Well, as a moderately armed sheep,
Wolf in sheep's
I would say the value that we bring is basically access to capital, not just what we invest, but you get other capital, key staffing, and then help with the exit. So if we invest 100,000 or 2 million. Even if that's all we did, and I like both kinds of investors there, but even if we went passive, you should be able to use that to raise more money, just without us. We would never do that. We invest, and then we'll call, we've spent time on the phone. I've tried getting you to invest in deals. But I also, tell the truth, right? So
Yeah.
we help other investors with trust invest in our deals. That's been one of the biggest things we do. So we're investment bankers. We'll get you all the way through in raising money, whether it's money from Riyadh or money from Sandhill Road. That's that. We meet the power of an angel group, and this is where our hybrid comes in. Is we have tons of CEOs that have engineers in the valley and offshore. So we invested in Backplane after Sequoia, after Peter Thiel, Eric Schmidt, and we're the ones staffing their engineering team. So we're bringing engineers into that, which is really tough stuff. That's how you go to networking events on the weekends to get engineers, which sucks if you're married and a workaholic. And then so staffing board advisors, and even at that level. And then the last thing is, I personally have relationships with M&A at Yahoo, Facebook, Google, all those guys, VMware, Cisco. When you want to sell your company, we'll bring those in. So those are the key areas of value add. and that's a good angel or a good VC firm.
Great. Well, just to tag along with what Trish had said about portfolio, so she mentioned, really great, getting more people to the table. But on a tactical side, we also help you think through the details of how you're managing that fundraise and managing the investors and that whole logistics. I mean, it's a mess. You have to do your business and raise money. So we coach you through how that's going to be done. And we also are tapping into what Trish didn't even talk about is her huge network from the venture capital community from her many years with the Kauffman Fellowship.
Yeah, so at Uncle to Angels, I think we spend a fair amount of time working with the entrepreneurs themselves. It's amazing that a lot of times we see there's so many different holes, and even in their pitches, right? We try to basically help them with a certain format, basically saying, and a lot of times it's either it's too long or it's too terse. And so we had to spend a fair amount of time working with them. And so what we do is before we actually have them present in front of our investors, we go through a screening process. And so in that screening process, a lot of the feedback that we give them is going to be about their pitch itself. Is saying, here's what you probably want to do, or this is how you want to define it, based on our information about our investors. And saying we know what kinds of things really resonate with some of our investors, and we try to basically help them with some of the stuff. And we basically do that really, no really extra charge or whatever it is. It's just ex gratis. We do that. So that really is a lot of, that really helps the entrepreneurs, refine their pitch. Anytime they actually are presenting to us, I think they're basically solidifying their ideas, and that really helps them, I think, from that standpoint. And then in the actual events, we have events 5 times a year where up to 4 startups come in and actually present in front of the investors. And so there's an open feedback session after that where, everybody who's in the forum basically gives them candid feedback on here's what you need to do. Right, and so that model that has really worked well for us, and really they get a lot of, essentially free advice for something that they would have to go pay, a consultant a huge amount of money on just getting some real world practical advice on from the trenches.
A key point of what you're saying, and also Roger's point, is that one difference between a VC and an angel sometimes is the angel is seeking a psychic reward, not just a financial reward. So sometimes you match the right angel to the right deal, and someone is semi-retired or even young who wants to pass on experience and is looking to take someone under their wing, and so that can become a really rich experience for both the mentor and the mentee. And the mentor, the rich person as the angel, is often learning as much as the young CEO, and so it can be a beautiful relationship. And it sounds like that dynamic is clearly at play in your network, where people are just sucked into that deal and helping the guy.
Yeah, and some of them just really, they understand the technology and they really latch onto this, and it's like, oh, I really like this idea. And so, but here are some of the pitfalls. Let me tell you, let's walk to the side and I'll tell you all my experiences. So that whole mentor network, if you will, sort of an informal mentor network that gets germinated as part of this, I think is very important. So,
where the ice cold VC might unplug the company even though he knows that's going to be divorce, killing a company.
Well, now we're going to open up for Q&A from the audience. So, anyone have any questions for the panelists? Yes.
What do you expect, or would you invest in someone coming from outside of America, and what do you want to see in this company, especially if they are from another country? What attracts you to this kind of companies?
Basically, outside the
I have an opinion on that, so let me just jump in on this. So we actually had at least several startups from India who basically wanted to come in and raise money here. Right? And there's 2 flavors there. Either the companies are actually registered in India itself, or they're people who actually have registered operations here, but then they just have engineering organizations back in India. And what we found, I think, is the people who are registered here, I think, have a better chance of raising money than the people who just registered in India. Because there's still a lot of apprehension, at least in our investor base, about, well, how do I put my money? How do I repatriate it? What kind of liquidity is there, specifically in India, in our case. So I think the same thing applies to, other, places, and various degrees of considerations with respect to how you put money and how you get money back. I think that's what we've seen, I think, in that, and is that if you actually have a base here in the U.S., you have a registered company in the U.S., I think you have a better chance of it.
Other folks may have more opinions.
I would echo that, but I'd make it even stronger. just speaking for our group, that you'd really have to have your corporate headquarters here and have your marketing presence here and your ability to learn the market physically here. And then you could, have other pieces in other, wherever your home country is. But I think, and then another issue is exchange rate volatility. So each country is very different, but there's our, concerns about how do you get your money out of a country. But again, I think there's so much about knowing the market that is huge, both where, whether it's the EU or Asia or here, but there's so much risk at the early stage that it's like, oh my gosh, let's not add something else. So it has to be super compelling and then based here, look people in the eye, and then I think it's possible.
I think it totally depends on whether it's an active or passive investment, right? If it's an active investment where we've got a level of interaction, it's going to be really pretty tough, right, to do that. I mean, even though telepresence is great, right? I mean, we do all kinds of things with telepresence. It's going to be a lot harder to do that, with a level of cross-border remoteness.
Yeah, that's another.
Well, I was just saying, it's not that clear anymore between what a VC is and what an angel is sometimes. And so you have a lot of the micro VCs that are like Anna Lajersoia and people like that do a lot of investing outside of the U.S. So there are definitely people there that are kind of on that angel edge in the middle, but you really have to find them.
That's a good point, yeah.
I've always believed that angel investors should be geographically agnostic, at least within the states. And with all due respect, some groups have these archaic rules that you have to be within 50 miles of where we live to qualify to make an investment. We hire people in countries that we've never been to. We hire people we've never met. We ought to loosen up a little bit in terms of where we'll make our investments within the states. But it's tough enough for a company in Detroit to raise money without coming to the Valley. So I guess we're spoiled because of the neighborhood we live in.
Good point. Good point. That's another. Yes.
Yes, hello, my name's Kate O'Hara, and across the board, just real quickly, I've invested in some different companies. I've got my own company now. If you were to say how many that companies you actually invest in a year, is it 10, 20, 50, and then maybe just real quickly address like what the deal flow is that you see to get those 5 or 10 that you do.
Our investment base is 2 to 3 a quarter, and it could pick up and it could go down. If we're following a syndicate, it's easier to move and just, Andreessen Horowitz just invested. I need to get in this thing by Monday if I'm going to get in. That's different than if we're really leading it and having tons of conversations with everybody at Golden Seeds. But
You love us.
well, no, I know. But it's taking longer. We're both going back and forth with what do we think, and more data, more vantage points around the same thing is good. The second part, and what's the kind of deal flow? For us, we've debated if we want to reveal how much deal flow we're getting, because people are like, well, you're obviously not reading your emails. It's over 1,000 a month, so it comes in. And so the answer there is the best thing is to go through a CEO we've already invested in, or one of our LPs. So I would think if you have 25 people in the Angels Forum, get to one of those 25, to get in.
I've heard that 10-3-1, so 10 pitches, 3 investments, 1 exit. It's kind of a good way of thinking about how it works in terms of your hit rate. And
I had a question
So
about...
ours, just our percentage, it's under 2%. But I don't even remember the number that come in, but we do about 12, 13 a year.
And just average, I'm sorry, just average, is it like, you were saying like 100,000 up kind of a thing? Do they come in, around 200 or 5 million?
I'm not sure if it helps an entrepreneur seeking financing to think about the statistical rates of success. I mean, make an analog to Hollywood. What are my statistical chances of moving to Hollywood and getting into a movie with Leonardo DiCaprio? Don't bother with that. Just be like, how am I going to get into Hannibal. If I can't find a way, I'm going to make one. More of like, how am I going to do this? Is a better way of thinking about that. Another thing to maybe look at the stats is to say, all right, I just had a meeting with Ron Conway. How many meetings convert to a 10-3-1? How many meetings convert to successfully, closing financing? In how much time? And what's my personal runway and my company's runway, right? And then maybe even think, what kind of investor am I dealing with? What's their hit rate? So he's diversified across 150 companies, SV Angel. I've got all my eggs in this one basket. What does that look like? I wouldn't worry about what are my chances of getting into a Hollywood film. You've decided you're going to do that if you're going for that.
And I would just throw in real quick the amount of money invested now with syndications and stuff between angels. That even though sweet spot's generally $100,000 to $300,000, I think for most angel groups, we can syndicate. We can join up if you have a really good idea and it's promising. You have revenue. You have all these promising milestones in place. We'll find a way to fund your company and get you the money you need. So,
I'll give you my numbers. I have an outdated website, currently way out of date. I don't ask to be pitched. I get about 200 to 250 deals a month, and I look at every one of them fairly quickly. I'm not a full-time angel investor. I run another business. I got behind 2 companies last year in the last 12 months. One of them was a company called Make a Stand. We just closed $1 million seed round. And another company called Cash Bet. We just closed a $1.7 million seed round.
And I would add to thinking about this is how long it does take to close. So with angel groups, I can speak from Investor Circle, it could take anywhere from 3 to 9 months to wrangle up all those investors, get them to the finish line and get you the money. So when you're thinking about your runway, you have to incorporate that sort of decision-making process.
Another question?
Yeah, I had a question. If in those situations you mentioned the number 20, 25, maybe seed people that come together, angels that come together to do a round, if you're looking for a sizable amount of money, is there a formal, repeatable way in which the management team interfaces with selected members of that team? Because that's always been a concern of mine. I mean, I like having that involvement, but I'd be terrified if I was dealing with the amount of traffic of 25 people dealing with them on a daily basis.
So this is something that's been formalizing. So when I first raised angel funding for my company in the mid-90s, I had that problem of people calling me, needing to report to them, just putting all their emails in one thing so I could efficiently stop digging them out of my CRM. With Georgetown Angels, we are set up as a Series LLC. So if everybody in this room decided to invest in your company through us, they would buy ownership units in this series of the LLC, and you get one shareholder. Okay. So that'll make your company more attractive to institutional Series A, B, VCs. It'll be, even in an IPO, it's looking better. Dealing with the secondary market and information and confidentiality and all kinds of things. It's just better, 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 better. So the Series LLC thing came into being a while ago, and some are making one LLC for each investment, like an SPV, special purpose vehicle, and that's one way of doing it. And I think the magic is being able to, if you get a bunch of really smart angels that are dying to impact your business, or this, like, it sounds like a great thing with Portfolio, that you've got all these women influencers that can spread, the word about your business like wildfire on eBay. You want to have this, strike a balance of, you're managing your cap table and your investors while they have a psychic experience of, I've invested in that company, I've met the CEO, I'm using my Rolodex, I'm being helpful.
Thank you. Yeah, I can see both sides of it. I just wanted to see.
I think a lot of it's also about push communication, right? So I've seen one really handle it effectively. We get, monthly. I mean, there's certainly interaction if personal level, if people have value or participating in some way. But in general, there's at least a monthly update, and that goes out. This company has probably 40 or 50 angel investors, all individually. It's not through a syndicate, it's not through an LLC, but it's just really good communication. And different people have there are different levels of activity, but they're addressing it that way, and it's a status update that he should be doing anyway.
Yeah. But we also always do an LLC, just so you know. So it's one entity.
But Trisha, isn't that something your platform is almost like built to handle as well?
That's exactly right, and I think that we're going to see a major shift in that when the non-accredited crowdfunding comes in, where you can have
Thousands, yeah.
thousands. And it'll be a whole different way of thinking about it, much more like how public companies think of investor relations.
Great, great. You have more questions? Yes.
So actually there is a crowdfunding platform that does equity investment out of the Middle East. It's called Eureka.
Eureka.
It's called Eureka.
Eureka.
Yeah, and what they do is that they give you the choice, once you reach your target, to either have all of your investors bundled in as a limited liability company, but in one of the Caribbean islands, I'm not sure which one. And or you can have them as individuals. So, sorry? No, it's not in Cayman. I think it's in BVI or.
So where you could even do, two levels where if someone wants to come in for, let's say, under 20,000 goes into your LLC, over 20,000 goes in directly, or you can put together those hybrids too.
Yeah. So, well, in my company, we were considering going for Eureka because our investment was dragging along. It was taking a long time. So we were like, okay, maybe we'll go through the crowd investment platform. But then we pulled the plug because of this. Like for the future, having institutional investors coming in when you have so many individual investors that you don't know individually, we saw that as being problematic. So I wanted to get your opinion about that too.
So well, I would say, that what we're seeing, we're in the middle of something that we can't actually see well because we're right in the middle. We're going through a huge disruption. And you would think because VCs disrupt every other industry that we'd be able to, understand it and recognize it better, but we don't, And so we're really, a number of years now, we're going to look back at this and say, geez, we had no idea, And even the words around it, it's like, the horseless carriage, we know not, we're describing it as what it isn't not yet what it is. And so I think all of these issues are going to be big. There are law firms out there that are dropping clients that are crowdfunding or doing public solicitation. So we're just we're in a place of kind of a chaotic space right now, but the thing for entrepreneurs is it is good for you when the financing world is going through a disruption like this, because it's going to end up with expanded opportunities, I think.
I think we should send Tim Draper to Washington like his father, put him in as chairman of the SEC for 3 months, and then we'll come out of this with crowdfunding that works.
We're supposed to get 7 states for California now.
I don't know, we should ask him. I think he might do it. He might do it, but his son's got biz. But I think with your question, the real answer is all this angel stuff helping is nothing compared to, at the end of the day, you need money.
Yeah.
So if you really need the capital and your choice is shut down, and start becoming a consultant to survive, or take that money, and what you may end up doing is getting a good law firm to figure out how they can become a Delaware C, have a fresh start. All that stuff is in your past.
No, we ended up getting institutional money. So.
Oh, you did? All right, so you made your
yeah.
decision. Okay, congratulations.
Don't forget the importance of smart money too. Crowdfunding, obviously we're all talking about it, but a lot of that comes with no strings attached or anything. There's no skin in the game. So I feel, that's what we tell, or my colleagues tell a lot of entrepreneurs that come in and want to discuss that. It's like, you can go ahead and do that, but you don't have somebody you can call at the end at 12 o'clock at night with a problem. You don't have somebody that's walked through those issues and worked in that industry before. So the expertise, the smart money is really tremendously valuable, much more valuable than an actual dollar.
Yeah, I have a question. What is your perspective on having celebrities be part of the early funding of the company, maybe for the growth of that company, or kind of the relationship as a professional, institution, to have those, high-profile personalities be part of that process?
I think it's good as long as it's measured by the dilution. So one company that we invested in, Backplane, first investor was Eric Schmidt and Peter Thiel and a lot of others, but Troy Carter invested, who was the manager of Lady Gaga, and then Lady Gaga became the first customer with her Little Monsters website. And without Lady Gaga, I don't think that Backplane would have attracted Sequoia, Menlo, Battery, Greylock, and Google Ventures, and all these other guys that invested with us. So I think it's great. I'd like to have Mark Wahlberg invest in my fund, and and get as much Hollywood as we could into it. My past experience, 5 years in the past of dealing with celebrities, we had like David Spade wanted like 50+% of the company. And you might as well have been in the middle of some provincial location where they don't understand that you can't dilute a company like this in the beginning when it's going to go through. I mean, you were in Open Table. Open Table had 9 VC rounds, right? I believe it was 9 VC rounds. That's what it takes to get to an IPO. So celebrities need to have someone advising them, like former partner of Venrock advising Branson, and then it's all good. But in general, celebrity is worth a lot more money than PR. I mean, that's great.
Just have a question from a client in Southern California. I have a startup targeting business and family. Currently, I have 200,000 and another 300 committed from 2 individuals. I'm confident that I can easily raise another 500, basically a total of 1 million. I need about 2.5 million so I can bootstrap for a year and launch the company, or 5 million to fully launch. Question: should I approach angel or venture, or try to raise something, the remaining 1.5 million? What will bring smart money?
I would say look up the definition of bootstrapping.
I'd love to bootstrap with $1 million.
Me too.
I would tell them to look at ways that you can prototype and validate the idea before you have to go to big money. So obviously, if you don't have to go to VCs, you don't want to. I mean, that's kind of your last option. So for a lot of people, just take a small amount, take 50 grand or 100 grand, prototype your model. So you have something physical, something that you can validate and show. And then if you get successful there and get interest there, then start talking serious conversations.
You can do a lot these days with a little bit of money. I completely agree. It's just use the small amount of money and try to get something into test.
Yeah, this is an MVNO, so it's, I think it'll be a little more capital intensive. Just that's my question. That was another question. My question is, when you've got founders coming to you for an angel round and they have an outsourced IT team, do you guys invest, or do you really want to see the IT folks in-house?
Yeah, we're okay with it outsourced. We'll often dig and ask a lot more questions and be comfortable if there's a strong technical person on the team, and when are they going to move it in-house, if so, if not. But that's not...
I think it depends on, is it a technology-enabled product, or is it a technology product?
Yeah.
If it's a technology-enabled product, then we're a little more agnostic. Did they get the job done? Is it done with quality? Does it scale? Does somebody on the team know what they're doing in order to get the right quality, or is this whole thing going to have to be rebuilt? Is it going to fall over on itself when it actually goes to customers, right?
One thing to consider is that unlike the VC, who's got the challenges of managing a $700 million fund with a 5-year commitment period to get into new deals, when we're angel investing with our own money, you sometimes can de-risk the investment by thinking, I might just sell this to Facebook. So there's a company that we're looking at out of Cleveland where I'm pretty positive that we could sell the company to Facebook, Google, or Yahoo for easily $30 million. And if it did not have 2 technical founders in that management team, it'd be hard to have a successful acqui-hire, And if it's totally outsourced, what is the buyer, Google or Facebook, paying per engineer if they're in the Ukraine or Mumbai? So another thing is, in order to get an outsourcing company that's really good to get behind a company, they often want to see the technical founder in there to deal with. So I think a few years ago, like when I was starting out in the mid-90s, it was a mistake to give away too much of the cap table to the web developer. You should just pay the web developer and get diluted by 10%, and he's happier working for dollars than for shares and equity. But these days, having a technical co-founder in there has become much, much more important. And when a company runs out of money, and you've got technical founders in there, they can kind of live and sleep under that same table and make things happen. So it's more important now than it was in the past.
Any more questions for the audience? Great. I'm going to close with one last question for everybody, and I know some of you new angels, but tell us give us the quickest time you made a decision to invest into a startup, and why.
The quickest time?
The fastest time you made a decision to invest into the startup, and why.
Well, I personally have not invested in anything up to this date. I joined the Angels Forum as an entrepreneur in residence, so that's kind of my main role. However, I'm doing screening for all these pitches, and I know that going back to having everything geographically located close by, having weekly meetings, that we can move faster than most angels. We've closed deals within a month. We've closed a deal when I came on early January. I think it's going to close, should close this week or next week, and it was maybe 3 weeks, 4 weeks total. So it's really about, you know, if you have all your stuff in place. I think in that specific example, it was a medical company. They had some sort of medicine or something overseas that was going to expire if they didn't get the money in time, and they were going to take it out of storage, and that would have ruined the whole sample. So there was some timing behind it. But generally, angels move a lot faster than VCs, or I don't know how fast a lot of these folks move, but weeks is certainly realistic.
I made a decision in probably half an hour on one, that I saw this guy at an early stage event, and he just really, even though he didn't have a company at that point, I just wrote him a check to lock it in. That's the only one of those I've ever done. It was just
Okay, how'd it work?
I think I've given that a lot of runway, but it basically gives me a hook into this guy and his patent portfolio at a very, very early stage. And my expectations are quite low, but it's really a cool thing. Other than that's the only one of those I've ever done at that emotional connection level where I got it. But in general, probably a month or more of iteration, due diligence process, especially as part of a group.
The shortest would be about an hour, and there were 3 of us together, you know, watched the pitch, and all 3 of us knew the space and looked at each other and said, let's do it, you know, that's done. And it ended up being a very nice, it put a down payment on my next house.
Nice.
You know?
But
I've only done that once. You think being that worked, I would have used it as the pattern. But.
Yeah.
But you say the key would be that
You had domain expertise.
Exactly.
Domain expertise, and there were 2 others with me, and so we all, you know, because there's that place of looking at it and going, wait, am I missing something? And we all, no, we all see it. Yeah.
Wow, that's great.
Congratulations.
So
Successful deal.
I have 2 examples. One is a company that just instantly I knew it was going to work, but here's what's the key. So we actually invested as a group. Golden Seeds did, and we went from start to finish in about 3 weeks, which is unheard of. But I saw that entrepreneur about 2 years prior at an Angel Capital Association getting an award for the most innovative technology, and I sat there and thought, how did we miss that? And then 2 years later, I heard about it through the grapevine that they were reopening. They needed a little bit of money, and it was about to close over Thanksgiving. And I called that person up and just said, you've got to come. You've got to come down here. We dropped everything, changed our agenda, got them in, and then the rest was history. So but I think what gave me comfort was just that I had time in advance to kind of know about the opportunity and dig in a little bit, and that's a really good deal. And another, which I would say didn't have quite the same outcome, but I know what was attractive, and it was a space that I knew quite a bit about. Really strong credentials from this very young entrepreneur, and I think I fell in love, and I forgot that when you're a first-time entrepreneur and you're really young, there's just so much you don't know, and anyway, the rest was history.
We might have to actually wind it up there because
Okay.
we've got another round table straight after. I'm sorry to cut you guys short. Thank
Awesome.
you so much, Wayne, for moderating, and
Thank you,
thanks
guys.
to all the